Good evening, traders. Today is Tuesday, February 14th, Valentine's Day. In the markets, it was one heck of a gift they gave us, didn't it? Market maker decided to give us a dump, a pump, a dump, and then a pump. Couldn't believe it. Okay, so today we're going to discuss that actually we have higher highs than yesterday. Yes, we did. And that actually the uptrend has started about 2 days ago. You're going to see some charts on SPY futures that show that. And today we officially broke what I will reference to and that you will see examples of, the pink downtrend line. It was broken today. That line was started since February 2nd, but it was now broken. Okay, finishing at near, not quite session highs, because the session high was actually in the morning on that pump before the dump. All right, so well, and then finally we're going to lead it off, not lead it off, finish it off with some intraday tweets. Not too many of them, just a few. We all know what happened today. Okay, actually I want to start off with a tweet from yesterday, 3:20 p.m. yesterday. Let's get the pointer going on here. See that? So, yesterday I was talking about curious how market maker positions around 413. That was the magic number today. Yes, it was. Okay, but I tweeted this out yesterday before close. Oh no, it was actually after close. 3:20 Central Time is market's already closed. Okay, so I already started talking about 413 last night, yesterday. Okay, here's that pink diagonal line from the February 2nd peak, right there. I know it's kind of hard to see, but I just drew that line, and it intersects perfectly last night, yesterday evening, with the gray channel line. You can't really see it. You'll see it in others. Oh well, you can kind of see it right here. You can kind of see it right there. Yeah. So the pink diagonal line down, I call that the downtrend line, intersected it perfectly. So I was wondering how he was going to handle that last night. Now we have the answer. It just surged right up on past it in the pre-market hours. Okay. So once again, 413. That's that gray line. You'll see that again in other slides. Okay. All right. Last night, futures kind of slowly grinding down, whatever. But I also showed, you'll see a clearer slide of this actually in a couple slides. I showed the 4-hour MACD shows a new uptrend has begun. All right, I sent that out last night. You'll see more of that in a minute. But here's the 1-hour chart. Yes, here's today's close, right? This was yesterday, so since it's an uptrend, that's the gray 413 line. That's the infamous gray 413. That's the old channel bottom that in November and December of 2022 we were messing around in that channel. Okay, that's the old channel bottom. And so there you have it. We made higher highs compared to yesterday. That means the uptrend is allowed to continue. We did not make a lower high, right? That would suggest that we're going to go lower if we made lower highs. Okay. SPY futures 4-hour. All right, let's check it out. This is December 19th, right? It got all the way down to this, by the way, December 19th. As you know, December 14th was the FOMC when Jay Powell put the mic drop. So this was December 19th. Notice how it got all the way down to the bear line for this is the 4-hour chart. Negative 35 is the bear line. It touched that bear line, okay? Now, 4-hour MACD. About a month later. Yeah, because this is January 20th. We'll just call it January 20th. A month later, this completes that cycle that started December 19th. We'll just call it January 19th or 20th, whatever. Close enough. This is the conclusion of that. That is a higher low than that. Okay, so we'll just say January 20th, January 19th. All the way until a couple days ago. Call it February 12th. February 12th, from the 19th. So about 3 weeks. Call it 3 weeks. That is the conclusion of that. That is a higher low than that. And this is where the MACD 4-hour is today. Despite a big red morning, despite that, you don't have the MACD curling down below the signal line, and it is still up above the zero line. Okay? Just want to point that out. You can't go down. The first criteria is you got to cross the signal line. Then the second criteria is you got to go below the zero line. There's 2 criteria you got to meet to go lower. Okay? SPY futures 1 hour. All right, check this out. This is January, call it 19th. Yeah, January 19th. That is the conclusion 2 days ago on the 1 hour. That's a higher low. That's a higher low. Okay? So, I'm just showing you these as basically retracements. They are retracements of certain short-term, call it 2.5, 3 week cycles of the MACD. Okay? Beginning and end 2 days ago. Just like this is an end of the, it would have been like the December. Yeah, it would have been like the December. You can't see it off the screen, but it's there. Notice these little notches. Notice these little notches. They stop. They stop the fall. Okay? So we are beginning a new we're beginning a new trend. We're not going down. It's the beginning of a new one, actually. All right? Okay, let's get into intraday. Yes, here we go. Here's the dump. Here's the pump. Here's the dump. Here's the pump. Last week it was a pump, dump, pump. This one was a dump, pump, dump, pump. Go figure. There's no way anybody could have really seen that exact sequence play out like that. Okay? No way. Okay. However, once again, there was strength here. Hidden strength again. Okay? And right here is when I tweeted out. It would have been right here. Let's see. 410. Yes. Yeah, that's correct. That's correct. It would have been right here. Went long. Right there. Okay. I want to see the next candle. MACD's curling up. So that was despite all this falling. Like, yeah, we're going long. Okay. Scaling long. All right. It was coiling in the pre-markets, and it had hidden strength. The strength was hidden, but it revealed itself just because of the way it was in the plan all along to retrace to 409. Actually, it ended up being 408, so I was a little bit off. 408 was the final target. Well, actually, 409.50. Oh, I was close. Okay, I was close. Ultimately, it was down here. So the hidden strength was that right here. Kind of hard to see. Let me see. Screen zoom in. Ah, come on. What are you doing? Zoom in. Yeah. This green candle pushed it over that gray 413 line. The old channel line. Just boom, boom, rocketed up here. And then it wicked up. And then big green wicks. I was like, yeah, no, there's some strength here. There's some strength here. Unfortunately for the bears, this was the goal all along for market makers. They were going to take it down to 408 no matter what. No matter what CPI said. No matter what. Okay? Do you want to know why? And let me go back. Oops. Let me go back to this one. Because this is simply mean reversion. Today is simply statistically mean reversion to this line that I've been talking about even last week. I said we have a regression to the mean. Remember when I was calling the market makers bluff last week when they started getting all the way down here? I said, you're bluffing, you're bluffing, you're bluffing. Oh, yep. And then we went right back up there, and then we came back down here to the mean, and then we went back up there again. It's a regression to the mean today, and they used CPI as an excuse to justify that regression. It had nothing to do with the CPI number itself, guys. All CPI did was to lock in a higher low here than right there. It was standard garden variety retracement, and they used CPI as the scapegoat to retrace. And then after they retraced to 408, they bumped it back up and made higher highs in the afternoon. Okay? So that's why, you guys, I don't watch the news. I don't care about the news. It doesn't matter. Okay? So I suspect it's going for a wedge with the pink downtrend line. Remember that pink downtrend line I'm talking about? This is the one big wedge. Oh, I don't have it, but it would have been approximately right here. It would have been approximately right here. Because in the afternoon, it broke it. It broke that pink downtrend line right here. This is the consolidation pattern that broke it. And it went up. It said, see you later. It made new highs compared to yesterday. Okay. So I'm scaling into these dips with calls. Yeah, you betcha. Oh, this is 944. Yeah, every time it dipped, calls. Dipped, got calls. Dipped, got calls. Okay. And then the old James down here. I got calls at 410.62. Oh, approximately right here. So, yeah. Oh, yeah. He got the dip right here. Okay. Yes, this is what MM is really up to. Retake the February 2nd peak downtrend line, pink. Then the uptrend permanently resumes. That's the line that it was going for it. I was like, I know what you're going for. I was talking about that last night. Okay. Yep, tweeted about the pink diagonal line, diagonal line last night. There you go. Talked about that already. Consolidation under the 1 hour SMA. Oh, yes. It was right here. Yep. Right here. Yes, right here. Right here. That's what that tweet was all about. Consolidation. Yeah. Normally that's bullish. But in this case, it came up and hit. I think it hit that diagonal. Yeah, it came up and hit that diagonal line. That's not visible right now. Hit the diagonal line, got rejected. But I contend, what? 408 channel bottom. Right here. Scaling long. Went long. I was like, you're not going to lose that bottom. That bottom is too significant. It's not just like it's not a pivot. It's just not a pivot point line. It's like, you can just lose that. No way. Nope. 408 channel bottom. Went long. Okay. It's ranging between 413 and 408. 413 is that gray line. 408 is the red line, red dashed. Gray dashed, red dashed. All other lines are merely pivot points. All other lines here today are just pivot points. But the gray line is the top. The red dashed line is the bottom. 408 is the bottom. That's when I called it. Yeah, 11:10 a.m. I said, that's it. It's the bottom. That's it. And that's what happened. Strictly mean reversion all along. Market maker was bluffing again. It was strictly a mean reversion day, guys. Revert to the mean, which is right here. The last 2 days, we went too far. That's all it was. Let's show you that again. Here. Yesterday and last night. Last night, yesterday. This would have been Friday night, Friday. Too much. When you include, 2 trading days of just straight ups. You got to retrace. So next time I'm going to have to clue into kind of more of that as well. It's like, what's standard retracement? So that's all this was. Retrace the mean, bounce up, and go. Okay. Last week, when I was calling the market maker's bluff, you went below the mean. Let's see here. 406. Yeah. Well, you start. Yes. Yeah. You went below the mean. That's when I was calling. I called the market maker's bluff right there. I was like, you're not. Okay. See what I mean? But this time did not go below the mean. You stopped at the mean and then you bounced off it. Right? Okay. Okay, the pink line, I talk about that again, from the February 2nd peak is significant. It marks the end of the previous trend and the beginning of a new trend. Once broken through this line, that's a wrap. And that is also corroborated by the MACD, 1 hour and 4 hour, those little notches you saw earlier. It's a wrap. By hook or by crook, that 2-2 pink line, peak line, will be taken right here. That would have been at that time, like right around here. There you go, right there. When I sent that tweet, I said, yo, you're going to take that line. CPI was merely justification to mean revert to 408. It's just math. Just numbers, guys. I cannot emphasize that enough. I do not watch the news. It's just numbers. Because the algorithms are programs. Since I'm a programmer myself, it's just numbers. I don't program things to look at text or news about something. If this news comes out at 9 a.m., then you need to do this in the program. Oh, no. No, that is not how programs work, my friends. That is not how they work. No. You are already pre-programmed for a certain destination. And that destination today was 408, regardless of what happened with CPI. It was already predetermined. It was already predetermined. Okay? So, consolidate under EMA 50. Uh-oh, that would have been like right here. Yeah, when I sent that tweet out right there. Uh-oh, what happens? Boop. Pop goes the weasel. The move was always up. MM just wanted to trap some bears down first. Old school definitions. When you have an EMA back test, the trend change is official. Right there. Okay. So, right at closing bell, it lost it and then it went under it. Hung out under it, consolidated under the EMA 50. So that's going to be interesting. Okay. That's probably just to give some pullback because the move up was pretty good. So just kind of pull back, kind of reset the MACD, and then rock and roll again later on in the evening. Okay. Yep. That's just me kind of watching throughout the day. I thought it was going to take that 413 line right here. I thought it would, but it didn't do it. So I'll wait for tonight to see what happens. Okay. The fact that it's using SMA 20 as support, it doesn't need the EMA 50. It's using the gray line as support. It doesn't need to touch the EMA 50. That is hidden bullishness. It doesn't need it. Okay? That's key. Okay. What's also key is if the market makers truly were going to take this lower like it did in the second half of December, if they were going to take it lower like they look like they threatened to do it today, there is no chance whatsoever that the markets will even attempt, let alone retake the EMA 50 line today. No chance at all. When the market is truly weak, like it was in the second half of December, when FOMC on the 14th, 12/14, if it's truly weak, intraday, you can barely even touch the SMA gray line. And that is a fact, my friends. Barely even touch that line. That means that always tells me, ooh, you're going lower, bud. If like all day you're kind of just coming up and touching the, like for example, let's just pretend all day you just kind of come up here. Oh, it got rejected by the SMA. Come down. Oh, come up, and let's just pretend you got rejected by the SMA again. You're like, I know you're going lower tomorrow too. You're going lower. But the fact that it just took it, and then rocketed up there and took that, I was like, There was strength there all along that the market makers tried to hide from everybody. But it was there all along. The target was always 406, and then they're going to take it back up. Okay? So, that is basically all I've got for you guys today. Feel free to follow me on Twitter if you'd like some more real-time tweets as we're going along. Don't forget to listen to your favorite music as you are trading. Helps you get into the right state of mind and achieve your Zen. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 Woe signing off.